Hi everyone, hope you had a great weekend. From an Elliott Wave point of view on Bitcoin, the directional bias is towards the upside as per the 3 Elliott Wave scenarios that I will cover in today's video. Starting with the first scenario, which also is the most bullish scenario, where we have a finished 3-wave structure and look for impulsive continuation. Here we then have a finished wave 1, a flat structure in a wave 2, and we look for a couple of more 1-2s before eventually a big wave 3 to the upside. Now this means that you don't want to change the market structure, and the invalidation is this low at 105.1k. What is important in this scenario is that the moves towards the upside are impulsive structures, or at least motive wave structures. So either an impulse 5 to the upside or a diagonal, which also is a 5 to the upside, followed by a 3-wave corrective structure. As long as price is moving to the upside in 5 waves, followed by a 3-wave corrective structure, we're looking for price to continue towards the upside and take out that local high every time. Now in the second scenario here, we're looking for a continuation of the range, but here also preferably we first move towards the upside. So here we have the same WXY as in the bullish scenario, but now it's labeled a wave A of a bigger corrective structure in a flat A, B, C, and after C it continue towards the upside. Inside wave B, we are looking for a 3-wave structure, most commonly a zigzag or a double zigzag structure. The zigzag ABC, which is the yellow line, looks very much like the price section of the bullish scenario I just explained, where you have a wave A, wave B, and you look for an impulsive move to the upside. In a wave C, you don't want this low to be taken at 105k, but in the WXY that you see on my chart, taking out that low would be no problem. You can have an ABC to the upside in a wave W, get a wave X towards the downside, and then create a wave Y. And wave Y should then also be a 3-wave zigzag structure to the upside. And we do have some support to the downside here, as I will show at the end of this video. Now, a minimum target for wave B in a flat is the 0.9 at 110.6k, and we just missed out, or at least Bitcoin just missed out on touching the 0.9, which is therefore the reason for these two scenarios. Instead of having a finished wave B at this high here, it would be much better for price to move to the upside, touch at least the 0.9 and still get a C or a Y up to finish B, and then get wave C towards the downside. And then finally, an alternative scenario, but one that I like to keep in mind because of the lower high. So we have the all-time high, and lower high again. However, in this particular scenario, we want this to be an impulsive structure, and that's a bit tricky on the lower time frame. But let's first get to this scenario before I jump into the lower time frame. So here, what you're looking at is a WXY. So we have a zigzag structure in a wave W and an ABC, right, as per last week, expanding diagonal in your wave C. Then you have a short wave X to the upside, followed then by a wave A, wave B, and a wave C, a flat in a wave Y. Now, mind you that wave Y is getting close to twice the length of wave W in time, by no means an invalidation. But if we're looking for a wave C to the downside in a wave Y to finish a wave Y, then preferably it happens soon, as the common target area for Y is like between a 618 and a 1.618 fib time of wave W. We're currently reaching a 2, which is no problem. But if we are starting to move towards a 3 fib time, a 4 fib time, it starts to be problematic. So time is important in this particular scenario. Now, in this case, though, you can see that the 0.9 is touched. It's taken from the start to the end of your first wave A to the downside. So that is a minimum target for your wave B. But as you can see, I still have a move to the upside in this wave B. Now, it is most common for Bs to take out the high, the origin of your wave A, which is the high here at 110.6k. But what's also important is that if we're looking for a wave C to the downside by any means, the first move to the downside has to be a high probability 5-wave move. So again, either an impulse or we're looking for a diagonal as a wave 1. Then you get a 2 and a 3, right? 2 and 3. And then you move towards the downside and you get the waterfall that is called a wave C. But if we look at the 15-minute time frame and we look at the first structure that we have here to the downside, it actually counts better as an ABC. So we have a first move to the downside, then we have our B up, and then 1, 2, 3, 4, 5, right? Now, if we compare this with the bearish scenario, where we want to basically force a little bit an impulse down, we need to have this as a 1, 2, 1, 2, 3, 4, 5, 4, 5. So these are your wave 4s. These are your wave 2s. Now, in an impulse, it is more common for wave 4s to be longer than wave 2s. And generally, it's nice if a wave 4 is about similar in size compared to 2, maybe a little bit longer. But it does not happen very often that a wave 4 is shorter than the 0.382 Fib time compared to your wave 2, meaning wave 4 is like 1/3 of the time, or shorter even than 1/3 of the time of your wave 2. I'm comparing this wave 2 here with this wave 4, which is this move to the upside. And you can see how short that wave 4 is compared to wave 2, which does lower the probabilities of counting this move to the downside as an impulsive structure, being a 5-wave move here to the downside. And it does look therefore better as an ABC, where in this case we have an A, a B, and then 1, 2, 3, 4, 5. And now we are comparing this wave 4 with this wave 2 in time. And if you would take a Fib time from the start to the end of 2 to the end of wave 3, toggle on the 1-to-1, then what you can see now is that this wave 4 is similar in size compared to wave 2. And that's something that we do like to see. So because on the 15-minute time frame, the probabilities for this move to the downside being an impulse are lower compared to this move down being an ABC. It affects the probabilities of this scenario where this is a B and you're already looking for a C to the downside. Preferably, we still get a little move to the upside to at least take out this high. But that is, of course, quite similar in the other scenarios, right? Where here, A, B, C, you also look for price to take out the high WXY, bit of a deeper retracement, but then preferably still look for price to take out the high. And of course, in the bullish scenario, you quite simply don't want to change market structure. In the bearish scenarios, you do. Now, if we then look at the levels, so here we go, the support and resistance levels, then as per last week, we found resistance here at the weekly point of control that we had around 109.7K. So that acted as a resistance here. To the downside though, price just missed out on touching the daily naked point of control at 107.2K. So that's still a level that I keep in mind. This one over here, I'm not sure if I care too much about the weekly naked point of control. Just below this low over here, maybe a bit of weekend liquidity, and the daily naked point of control is interesting. And if you lose the daily naked point of control, it is quite interesting to look for the monthly naked point of control, which is last month's highest volume level, right, at 105. And then to the downside, you can see there's a bit of a gap. Then we get to basically 101, and then we get to 96.5K. To the upside, of course, we touched the resistance here. We also had a daily on the chart. If you had my chart open over the weekend, you know there was a daily over here which we touched. And if you're like, wait, what's a daily? What are we actually looking for? Well, we can go to a daily time frame. We take this line over here, right? So you can see here, daily candle closed in the like bullish, right? A bullish candle, followed by a bearish candle. Support resistance area was highlighted on my chart, acted as resistance here, as you can see. So that was the first area of resistance that we really had as price was moving to the upside. We also had 2 daily naked point of controls, which didn't really do a lot, but to the upside, we do have still some resistance at 110.9 and 111K, which is just below the all-time high. Now, with regards to news, Wednesday, July 9th, we have some news, as you can see, at 8 p.m. Central European time. Make sure you trade safe, can increase the volatility on the chart. If we then look at the polylines and the probabilities, then the polylines summarize the expected price action per Elliott Wave scenario, and preferably, we still take out that high. right? Before at least a potential significant move down, or of course a continuation to the upside. That depends on the price action that we get if price moves up. So what I write here is the directional bias is towards the upside, right? On the 4-hour time frame, unrelated to locally, maybe taking out this low at 107.2 or moving to 105. It doesn't really matter for the directional bias on the higher time frame. Now, probabilities locally are higher for an ABC to the downside on the 15-minute time frame compared to an impulse. This translates into taking out the local high at some point. In a multi 1-2 impulse, we want to see, that's the green line by the way, we want to see motive wave structures to the upside followed by corrective retracements that don't change market structure, right? We're looking for higher highs, higher lows, higher highs, higher lows, and eventually a big push towards the upside. What you're looking for is similar to what you had here. This is what you're looking for, and then eventually you get your big move towards the upside. You don't want to change market structure. You don't want to lose 105 in the bullish scenario. Now then also, if price moves towards the upside in a 5-wave structure, the next retracement should not take out the previous low, right? So that is something we have to keep in mind. In the bearish scenarios, we want to change the market structure. That's the biggest difference, right? After the Bs are finished in red or in orange, wave C could be a strong impulse to the downside, or should be a strong impulse to the downside where you do change the market structure, right? You're going to take out these lows, you're going to move to the downside and test some lower areas of support. With regards to support, 107.2K, daily naked point of control, 105, monthly naked point of control. Then we have 101, couple of levels there, and 96.5 is the range of point of control of just a very big range, this one over here. And then resistance, we had the daily that was touched at 109.6, and then between 109 and 111.8, or 110.9 and 111.8, we do still have a few levels just below the all-time high. So that is what I'm looking for at the moment. Let's see what this week is going to give us. I will make sure to update you whenever something interesting happens. Mind you that because of my dad's birthday tomorrow and also the day after tomorrow on Wednesday, I will be very busy and I'm not sure if I can really provide an update. If anything, I might actually do a live stream instead, but I will leave early in the morning tomorrow and probably be gone for most of the day, and same on Wednesday. So I'll have to see what I can do. But again, if I have time, I'll make sure to provide either a video or a live stream for you guys. I just wanted to highlight it in this video that due to the birthday, I have a little bit of a busy few days coming up. But that being said, I hope this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott Waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.